Hey, how's it going, guys? We all have witnessed the crazy bull run of the FAANG stocks in the past 10 years. All of these 5 companies, Facebook, Apple, Amazon, Netflix, and Google, have all largely outperformed the broad index of S&P 500, with the future growth have already been aggressively discounted into today's price, and as well as the huge concentration in the market index due to their overwhelming crazy valuation. The major investment banks like JP Morgan forecast these 5 companies' average annual return will be only 6.1%. So the key question for a lot of equity investors right now is, who will be the next FAANG stock that can generate an outstanding return over the next 10 years? In this video, I will share with you guys my top 5 candidates that could be the FAANG stock 2.0. I call them the stars. If you missed the crazy bull run of the FAANG stocks in the past 10 years, or if you're looking for the next generation of the high growth stocks, then this video is gonna be perfect for you. Alright, let's get started. Co-founded by the Hall of Famer entrepreneur Jack Dorsey, Square is a financial services and a digital payment company that is disrupting the traditional payment processing industry. Their main business is to provide an integration of advanced hardware and software for small medium businesses and individual consumers. This is how Square made their money last year. 65% of the revenue came from payment transaction fees, 22% came from subscription services, which is by far the best business model in the world, 11% came from Bitcoin sales and investment, the rest came from selling payment devices. But what is truly driving Square's crazy growth is the fact that they are building these two extremely significant ecosystems that connect the business finance and the personal finance together. One ecosystem is on the business seller side through a point-of-sale system, helping them facilitate their day-to-day payment process and the business finance. The other one is on the consumer side through the Cash App. The Cash App has been the fastest growing digital wallet in the US market since it was launched in 2013. With these two ecosystems combined, Square was able to achieve more than 45% annual profit growth. Especially the rapid growth from the Cash App, it achieved an astonishing over 200% compound annual growth rate for the past 5 years, and is still growing like crazy. Here's the quick summary of the major highlights on Square's growth potential, and as well as how it compares with its peers in the same sector. I will not repeat all these numbers one by one, but what I do want to highlight is the EPS estimated growth for the next 3 to 5 years. Analysts are forecasting Square will be able to generate a 37.9% annual growth rate on their earnings. This is huge because 2019 was the very first year Square actually achieved a positive earnings. If Square is able to keep such growth rates, they can easily be qualified to join the S&P 500 index after 3 years, and that would definitely boost their valuation big time. Will Square be able to grow 37% for the next 3 to 5 years? As we can see from the analyst report, the total addressable market for Square's two ecosystems combined, just in the US alone, is already $160 billion. It hasn't even considered the overseas market yet. That leaves a really huge upside for Square to grow in the coming years. In my opinion, a 37% growth rate is definitely reasonable or even underestimated. Co-founded and led by the superstar CEO Jack Dorsey, Square's future looks extremely bright. The Trade Desk is a technology company that is serving a fast-growing and profitable market called programmatic advertising. The company offers a platform where business owners can spend their advertising budget as effectively as possible. Facebook and YouTube are two of the most well-recognized digital advertising platforms, but a lot of people don't really know that. Back in 2018, the Trade Desk was already able to reach 4 billion people every single day. That is equal to Facebook and YouTube combined together. The secret behind their success in this new booming programmatic advertising industry is their super advanced artificial intelligence technology that enables them to convert the entire internet digital advertising space into one convenient terminal. And this AI terminal can help their customers to get a business ad on the most suitable platform and appear to exact the right audience all the time, so their customers can achieve the maximum ROI on their advertising spending. As we all know, the advertising industry is rapidly shifting from traditional advertising channels to digital programmatic advertising, and this transition has been massively accelerated by the global pandemic lockdown this year. The Trade Desk is one of the top companies in the programmatic advertising space. Their revenues has been growing rapidly over the last 5 years, with more than 45% annual growth rate. The rapid growth in revenue at the Trade Desk is not only just about their unique product, there is a major global trend in the programmatic advertising space spending that supports this organic growth as well. On top of that, the company is already extremely profitable with an almost 80% profit margin, and their balance sheet plus cash flow look very healthy. Fantastic cash reserve, free cash flow with no debt. The trade desk already looks a lot like a mature large cap tech companies, but with much smaller scale and much more room to grow in the coming years. Overall, the trade desk and its programmatic advertising platform is truly at the epicenter of the future advertising. With their strong financials, revolutionary technology, solid management team, and as well as the massive trend in this sector, I do believe the trade desk will be able to dominate the digital advertising over the next 10 years. In our new world that is dominated by technology and a digital economy, data is the new oil. To take full advantages of this complex and rich data in our digital world, companies around the world need to find new innovative ways to collect, organize, and visualize the numbers that are most relevant to them to guide their business decision making. So in this context, the big data analytics and data science have become the key functions in almost every single organization on this planet. But one of the biggest challenges in this era of big data is that many users ended up struggling with extremely complex high-level software when they do not have any programming background. This is exactly where Alteryx comes into play. Alteryx provides extremely easy-to-use softwares that make the big data analytic process way much easier, simpler, and much more efficient compared with its peers in the same industry. And that is a huge game changer in the world of big data. Just imagine how revolutionary it was when Apple successfully created the graphic user interface and made complex industrial computers become a household personal device. Alteryx is striving to do exactly the same thing in the world of big data. On the financial part, they have very solid fundamentals and grow at an outstanding pace. The number of their customers is able to grow around 30% year over year. The profit margin has improved consistently since 2015. Last year in 2019, they reached a solid 91% gross margin, which shows their insanely strong profitability potentials. Free cash flow has turned positive since 2017 and is growing fast. For a young company, it's a really positive sign. Revenue has been growing at a fast pace as well, with an annual compound growth rate of 40%. But there's one thing I definitely want to highlight here is that due to the COVID-19 pandemic, their revenue growth rate has been largely affected, and their future outlook for the rest of the year is below average. Their stock price crashed more than 30% due to the lower than expected growth potential, combined with the overreaction from the investors. And that could give us a really good opportunity to get into this high growth future superstar company at a fair value or even undervalued price. If Netflix was the superstar for the past 10 years, then for the coming 10 years, Roku will most likely be the next Wall Street favorite darling of the TV streaming. I've always thought that Roku was just another streaming company that is competing with Netflix and the Disney Plus, but that is far from the truth. Roku has way much more potential than I thought. Roku has successfully transformed themselves from selling streaming player devices into a solid pure play in the rapid growing connected TV advertising industry. The company offers the largest connected TV ecosystem that supports all the streaming services, which means it doesn't matter whether you are watching Netflix or Disney Plus, Roku simply takes a small fee for connecting you to the original content provider. Also, they offer their own ad-supported channel as well. As I mentioned earlier when I talked about the trade desk, the massive shift to digital advertising is likely to accelerate over the next 5 to 10 years, and we will see more and more companies reallocating their marketing budget to digital advertising, and the Roku can be the potential monopoly in the connected TV advertising area. Their massive growth mainly comes from 3 areas. First, the user growth. Active accounts were up 37% year over year to 40 million in the most recent quarter. Second, the engagement growth. Users are spending more time on Roku platform right now. Streaming hours were up more than 40% in most recent 3 quarters in a row. Third, the ARPU growth, or the average revenue per user growth. This is probably the most important metric when it comes to the profitability of any content consuming platform. And the Roku was able to grow 28% year over year on their ARPU, which is extremely impressive. Overall, Roku is very well positioned themselves in the online streaming platform business and ready to capitalize on its long-term market opportunities as the go-to TV platform plus the advertising ecosystem. I strongly believe their stock price will have a tremendous run for the coming decade of 2020s. Shopify provides an easy-to-use platform that helps businesses of all sizes setting up their own online stores. The company is expanding their ecosystem from just e-commerce web hosting to a much wider operations like financing, logistics, and marketing. As the result of the pandemic and a global lockdown, businesses around the world are forced to turn to online platforms to sustain their operations. For Shopify, this means that its total addressable market just suddenly becomes much larger. Apart from the massive growth we're seeing in the e-commerce industry, the rising numbers of self-employment and the increasing consumerization of those large enterprises will also be the major trend for the coming decade. And that is exactly where Shopify's next opportunities are. Although Amazon is still dominating the total market share of this e-commerce industry, Shopify has been crushing it with their extremely impressive growth rate compared with their competitors, including Amazon. There's no other e-commerce provider that can grow as nearly as fast as Shopify. For the past 5 years, Shopify was able to grow their revenue from $105 million to $1.7 billion. That is a crazy 75% compound annual growth rate with a 50% profit margin. This is the textbook growth pattern of any FAANG stock in their early years. Searching for the next FAANG stocks is all about finding the stocks with massive growth potential. And for Shopify, their growth potential for the next 5 to 10 years will largely come from these 4 areas. First, the Shop app. Early this year, Shopify announced they will launch their own online store app, the Shop. Mobile has been the major online traffic source since the smartphones went to everyone's pocket. Shopify's next move to mobile will definitely drive their user base even larger. Second, the fulfillment network business. Shopify launched their fulfillment network last year back in 2019 with the ambitions to achieve affordable 2-day delivery for all their merchants within 5 years. The company acquired the most advanced 6 river system to accelerate their progress in this space and has already reviewed the plans to leverage machine learning to optimize the fulfillment network. Such a delivery system would definitely make Shopify's merchants way much more competitive against Amazon. Third, the channel partnership. Shopify has been in partnership with platforms like Facebook for years. When Facebook Shops was launched, Shopify's merchants were able to create their own self-branded digital stores easily on Facebook. More recently, Shopify was able to expand their partnership with giant retailers like Walmart. Such channel partnership would definitely drive Shopify's future growth. And finally, the international expansion. Shopify is still heavily dependent on the North American market. For the coming 5 to 10 years, once they open up the international market, it won't be surprising to see Shopify's valuation doubles every couple of years. Overall, I strongly believe Shopify will be able to lead the e-commerce revolution over the coming decade and become the go-to solution for nearly all sizes of businesses and allow them to sell in multiple channels. The future of Shopify looks extremely bright. Alright, there you have it. These are the 5 companies that could be the potential FAANG stock 2.0 and generate a massive return over the next 5 to 10 years. I call them the stars. Before we finish this video, I do want to highlight one important thing about the macro environment that we're entering the new decade. The decade of 2020 to 2030 is going to be an extremely challenging decade for the financial market because it will be the decade of low interest rate, low treasury yield, low inflation rate, and the potentially low economic growth rate combined together at the same time. But it doesn't mean that every company and every stock will suffer. And that makes our job as investors to find those high growth stocks in the coming decade even more important. Because when most of the companies struggle, there will be more capital flowing into those small groups of high growth companies who can generate consistent outstanding returns. Of course, these are not the only 5 companies that can be the potential superstars in the coming decade. These are just 5 of my top picks. You can definitely do your own research and find your favorite high-growth companies for the next 10 years as well. The main purpose of this video is to give you guys some high-quality investment ideas that you can add into your watch list for the next 5 to 10 years. I didn't get into too much details of these 5 companies in this video because I want to keep all my videos as short and sweet as possible without taking you guys too much time. There are definitely a lot of things to talk about when it comes to these 5 extremely exciting companies. If you are interested in any of these 5 companies or any other high growth companies in the US market, please do let me know in the comment section below. I will definitely do more follow-up videos on high growth companies for you guys in the future. Alright, that will be the end of this video. If you are new to this channel, my name is Vic. I make videos every week to share some of my thoughts on what is going on in the financial market, and also what are the trade ideas or investment opportunities that you should pay attention to in the market. If you are interested in the world of finance and the business, and finding my videos being valuable to you, please consider subscribing. Thanks so much for watching guys, and I will see you guys soon.